Are you destined to fail at trading? Unless you've been living under a rock or you're completely brand new to the world of trading, then you've probably heard people say that successful trading is only 10% strategy and 90% psychology, or some similar version of that. But I actually have a bit of a different view on this, because let's imagine for a second that you have the most amazing bulletproof trading psychology in the world. You were fortunate enough to be born with a brain and a mindset that was perfectly designed and suited to the uncertain world of trading. Well, good for you. That's great. It really is. But if your trading strategy does not have a proven profitable edge, if your trading plan is crap and it's not profitable, then it doesn't matter how good your psychology might be, because if you are not in command of a profitable strategy, you're still going to lose money over the long term. Therefore, I think as you start out, successful trading is actually the complete opposite. It's 90% strategy and 10% psychology. Your focus should be on developing and mastering your strategy. So that's why the order of the teachings in this course is designed so that you will watch the technical analysis module and you will learn the photon strategy and our approach to the markets. You will then spend time performing exercises to develop your technical skill set with this strategy. And then once you have created your trade plan, you will prove the profitable edge that your strategy holds. And you will prove this through building case studies, through back testing, forward testing, through trading on a demo account, and before finally trading it in the live market. So that with 100% certainty, with every bone and fiber in your body, that you are in command of a profitable strategy that gives you a proven edge in the market. Now, once you start trading it, potentially even on demo, but especially when you're in the live market with real capital on the line, what you might find is that your actual performance and results are not quite as high as you had found from when you tested your trading plan and you saw the potential that your strategy holds. Now, you may find that there is a bit of a gap from your live performance compared to what the actual strategy is providing if you were to trade it perfectly. And if this happens, this is completely normal, by the way, but of course our goal is to try and minimize that discrepancy as much as possible. But what's actually going on here? What is causing that performance discrepancy, and how can we close that gap? Well, since the establishment of the rules by ESMA in 2018, all brokers operating in the European Union, they are actually required by law to show up on top of the front of the homepage on their websites how many of their clients are losing money. It's a little bit like the cigarette companies being forced to put warnings on their cigarette packages and showing photos of people on their hospital beds with all types of cancers and horrible diseases. Yeah, that didn't stop people from smoking, and it certainly hasn't stopped the interest for retail trading. In fact, demand has actually skyrocketed in the last few years. ESMA has actually done us a favour in a sense because they have highlighted the true nature of trading. You see, if there are 100 people and 75 of them are losing, as it shows on the broker websites, then this is no longer a technical analysis issue. This is a human problem. And the sooner that you accept it's a human problem, the sooner you can do something about it. I did think it was probably going to be the end of the retail FX industry when all of the brokers had to put, all of their winning and losing stats on their websites, but it hasn't. Why? Because people know it. People are aware of it. But people think, well, this stat doesn't apply to me any more than the warnings on the cigarette packages apply to me. But the sooner that I accept that the nature of trading is basically random, then the sooner I can begin to trade as trading should be done. Normal does not make money, and I'm about to prove that to you in a second. You cannot have a standard attitude about money and do well in this business long term. You need to have a very special relationship with both losing and with winning. Because if 70 to 80% of people are losing money, then I think it's pretty safe to assume that 70 to 80% of people are normal, perfectly rational, well-functioning people within society who hold down jobs just as well as everyone else does, are intelligent, well-spoken, pay their taxes, look after their children, etc., etc. But they can't trade for shit. Why? Why is that? Because they simply think like everyone else does. They haven't learned how to deal with fear. So what are the winning 20% of traders doing differently? Well, to understand and deconstruct that, first we must understand, what does normal trading look like? How does a normal person think? Well, in 2015, a quantitative strategist called David Rodriguez, he analysed trading data from the popular retail broker FXCM, and he looked at 25,000 traders who executed a total of 43 million trades over a 15-month period, and he found some extremely insightful findings in the data. Now, remember that over 70% of FXCM's clients lose money. Out of those 43 million trades, what percentage of those trades do you think were winning trades? Well, it may surprise you to see that actually 62% of the trades were winners. There were a significantly more amount of winning trades than losing trades. Yep, the FXCM traders were good traders, it would seem. They had a good strike rate of 62%, and that is not bad whatsoever. So, what's going on here? Well, the problem is that when they won, on average, they gained 48 pips, but when they lost 82 pips. Traders lost over 70% more pips on their losing trades than they gained on their winning trades. Now, if this was just a section of my trades or your trades, you could say, oh, well, maybe it was just a bad week or a bad month. But when you look at 25,000 people across 43 million trades, and you can see their behavior, that is not simply bad luck. That is an extremely significant sample size that is worthy of investigation. So what is the normal behavior going on that is resulting in those statistics? I am letting my losses run. Why am I doing that? What am I telling myself? Well, I'm telling myself that I hope this market is going to turn around in my favor. But the real reason is I would like to avoid pain. We have a brain that is at least 200,000 years old, and its primary function is to keep you alive at all costs. And it would love to make sure that you never experience any pain. It wants to make sure that you maintain your ego preservation, your state of mind where everything is nice and rosy and good. So you'll do anything to avoid pain, your lower animal-minded brain. So it doesn't matter what scenario I throw at you. I'm taking my profits because, hey, you can't go broke by taking a profit. But this is still you avoiding pain. Why? Well, because you hate the idea that the market is going to take back some of your profits. I am winning, so I'm reducing my position size. Why would you do that? Well, because I want to take it easy now. Nope, you want to avoid pain. You can't bear the fact that you made £500 for the day, and God forbid that those £500 could disappear. Now, let me ask you a different question. Imagine that you made £1,000 on the day versus you losing £1,000 for the day. Which one of you in that situation is most likely to carry on trading? The person who has made £1,000 or the person who has lost £1,000? Because the person who has lost £1,000 is far more likely to carry on trading because God forbid he carries that pain with him on into the night, and he will do anything to get rid of that pain. But when he's made £1,000, he'll do anything to protect that and hold on to that because that feels so good to have made £1,000. So I don't want to jinx it. People are fearful when they should be hopeful, and people are hopeful when they should be fearful. So what do I mean by that? Well, again, imagine you are sat in a position that is making you that £1,000. You are no longer hoping that that £1,000 is going to turn into £2,000 or £3,000. Nope. You are fearful that that £1,000 is going to be snatched and taken away from you. And if you are losing £1,000, you are most likely going to sit there thinking, wouldn't it be great if this position turned around? You're not fearful that that position is going to get even worse. You're hopeful that it's going to turn around. And if you want to have a fighting chance of making money in the markets, making the markets a place where you take money out of on a fairly regular basis, then you need to turn this around. I could carry on and on with the rest of these common examples, but these behaviors are all ultimately caused by what? They are caused by the same subconscious human desire to simply avoid pain at all costs. The real problem is that avoiding those perceived pains, it can be very costly to your trading account balance over the long term. And here's one such example of a typical death loop that many FX traders find themselves in. They take a few losses, they start to doubt and hesitate their strategy or their own ability, so they skip the next trade or two in order to avoid that pain of potentially being wrong again or losing money. But then those trades that they skip to avoid that potential pain, those trades end up being the winning trades in their edge. And now they're pissed off at the market and or themselves, so they revenge trade to try and get rid of that pain by trying to be right and make money by forcing it on the market without being patient and waiting for high probability setups. So what inevitably happens? They take more losses and the cycle repeats itself indefinitely, and they eventually blow up and quit, or they play the break-even dance for the rest of their trading careers. So what's going on here? Why do we as humans constantly try to avoid pain? Well, to understand that, this might seem a little bit weird, so bear with me, but let's pretend for a moment that you are a giraffe. You live on the grasslands of the African savannah, you have a neck that's 7 feet long, and every now and then you spot a group of humans driving around on a safari taking pictures of you. But it's not just your neck and their cameras that separates you from the humans. Perhaps the biggest difference between you and your giraffe friends and the humans taking your picture is that nearly every decision that you make provides an immediate benefit to your life. When you're hungry, you walk over and munch on a tree. When a storm rolls across the plains, you take shelter under the brush. When you spot a lion stalking you and your friends, you run away. On any given day, most of your choices as a giraffe, like what to eat or where to sleep or when to avoid a predator, make an immediate impact on your life. You are constantly focused on the present or the very near future. You live in what scientists call an immediate return environment because your actions instantly deliver clear and immediate outcomes. Now, let's flip the script and pretend you are one of the humans vacationing on safari. Unlike the giraffe, humans live in what researchers call a delayed return environment. So most of the choices that you make today, they're not necessarily going to benefit you immediately. If you do a good job at work today, you'll get a paycheck in a few weeks. If you save money now, you'll have enough for retirement later. Many aspects of modern society are designed to delay rewards until some point in the future, right? And this is true of our problems as well. While a giraffe is worried about the immediate problems, like avoiding lions and seeking shelter from a storm, many of the problems that humans worry about are problems of the future. For example, while bouncing around the savannah in your Jeep, you might think, this safari has been a lot of fun. It'd be pretty cool to work as a park ranger. I could see giraffes every day. Speaking of work, is it time for a career change? Am I really doing the work I was meant to do? Is this my purpose? Should I change jobs? Unfortunately, human brains were not designed and did not evolve to solve the problems of a delayed return environment. We have the thinking ability to understand that saving and investing money, right, to compound it for a comfortable retirement later in life, we can think and understand that it's the logical thing to do, but we find it very hard to suffer the pain now for the delayed reward later. The earliest remains of modern humans are approximately 200,000 years old, and these were the first humans to have a brain relatively similar to ours. Now, in particular, the neocortex, that is the newest part of the brain and the region responsible for higher functions like language, and it was roughly the same size 200,000 years ago as today. So what this means is you are walking around with the same hardware as your Paleolithic ancestors. Now, compared to the age of the brain, modern society is incredibly new. It's only recently, during the last 500 years or so, that our society has shifted to a predominantly delayed return environment. And the pace of change has increased exponentially compared to prehistoric times. In the last 100 years, we've seen the rise of the car, the airplane, the television, the personal computer, and the internet. Nearly everything that makes up your daily life has been created in a very small window of time. A lot can happen in 100 years, but from the perspective of evolution, however, 100 years is nothing. The modern human brain spent hundreds of thousands of years evolving for one type of environment, immediate returns. And in the blink of an eye, the entire environment changed to delayed returns. But this is a problem, because your brain was designed to value those immediate returns. Trading looks so simple. You can see this probability stuff and you think, wow, I really could do that. You've done the numbers, you've played around on a compound interest calculator, and you look at it and you go, my God, I can make a lot of money. I can get rich quick. I can be financially free. You get intoxicated. You start dreaming that dream. You start chasing that dream. Then you start noticing that when you get in there and you start trading live in the market with real capital at risk, you just have this enormous motivation to win. You can see the vision. You want to conquer it. But the problem is that desire and that motivation to win at all costs, it comes from the very mind that is from your distant past. Unfortunately, your inner caveman is doing the trading when you are stressed. Primitive survival instincts, it takes over your decision making in those critical moments. And that's why, right, when people have great success demo trading with fake money when they're calm, but when they deal with real risk, when your real capital's on the line, with an uncertain outcome, suddenly the game is very different. We carry a lot of baggage with us from a time that doesn't even exist anymore. You are literally asking this caveman here to deal with a computer, to deal with the probability and uncertainty of trading. Literally to just sit there and to fight digital candlesticks all day long. Those survival instincts, they used to be so good and helpful for us. 100,000 years ago, getting lunch could literally kill you. We needed to believe that against all odds we were going to survive because we were in a very hostile environment. When humans didn't have all the cool tools, No houses or guns. We had these little spears against these huge, awesome predators. We had to believe that we were going to land on top and win. And that was a limbic learning. Now, that's the way that the emotional brain learns. It locks it in, and then it becomes a pattern. And that became a trait that was so successful that this need to win, this belief that I'm going to prevail, against all odds, that Rocky mentality, that actually became a trait that we all started inheriting. It became a part of our genome. And without that trait, we're not going to be the human beings that we are today. And you know what? To be fair, it's actually really helpful in modern business and corporate careers. That need and desire to win, that desire to project and predict what's going to happen next in the future. But then when we get into trading and everything goes bananas, what looks so easy no longer becomes easy. And we take that hard-earned trait that allowed us to survive, that short-term survival, we bring it into the long-term survival of trading, and it's used against us. Suddenly what used to be so good, so adaptive for us, that belief that we could conquer anything, become anything against all odds, suddenly it's used against us in trading. Because in trading and in the environment that we grew up in through evolution, they're completely different. The environment of trading is based on probability, not certainty. In fact, what happens is you become a good ambush predator. You don't go chasing after trades, you wait for the opportunity to come to you. Completely different things. You don't have to think, I have to win. What you're doing is saying, I'm calculating, and I know I'm going to be losing a lot, so I need to be able to manage that loss. But that's a dead human species to be thinking that way, 50 to 100,000 years ago. But here we are. That's what we bring into the game of trading. We bring an old ancient mind rooted in survival instincts that were good for us way back then. And then you discover that the mind that you brought into trading is not going to be the mind that produces success in trading. Testosterone, it really has to help you make you think you're invincible so that you can catch food. Otherwise, you never attempt it. But you can't bring that into the markets. You're bringing that ancient brain to the game, and your emotional caveman brain, all it does is see all uncertainty as a direct threat. Everything uncertain was a threat and a danger to our ancestors. And that's the brain that you're bringing to trading, and that brain is activated by stress. But traders need to embrace uncertainty. You need to learn how to accept the risk, and then take the risk, or you lose the chance of reward. Your brain's short-term survival orientation is going to compromise your need to take a long-term perspective in order for your edge to work in the heat of the moment. 80% blow up because they're sitting there pushing their agenda, thinking, I'm going to win, I've got to win at all odds, I can make this thing happen. When in fact, what you start noticing in trading is that you do not control outcomes. You don't control whether or not you win or lose. You don't control whether or not you are right or wrong. Because what you're engaging in is randomness. You're engaging in the uncertainty of the markets. You've got risk there. Your money on the line. Scary stuff, right? But that money to you is the risk of life to the caveman that is your ancestor. And now you've got a big challenge. You've got a short period of time where this thing needs to be happening. And all of a sudden your survival instincts kick in, and suddenly you have this enormous desire to win. And that's why most traders will actually move their stop loss to break even too early before their actually strategy dictates when they should do. Why? Because their caveman brain takes over and it wants to protect you at all costs from the pain of potentially taking a loss. It wants to remove that risk that you have off the table as quickly as possible. Because when you're sitting in this trade, you've seen that you're running a nice profit. Let's say you're running about, just shy of 5R, and you see that price is coming all the way back, and you think, well, I don't want to take a loss now, so you just want to remove that risk as quickly as possible, when your strategy says that you shouldn't do. And, as most of you are probably aware, that over the long term, that's a recipe for disaster. Why? Because you don't allow the trade the room or the time that needs to play out in your favor, because you have not accepted the risk that you need in order to capture the potential reward that that your strategy holds, and you potentially could have banked if you just did not let your primitive animal brain take over. Again, it's the same reason that most traders take their profits way too early, because the pain of potentially giving back to the market what you already have, that pain is too great. And your caveman brain, it takes over and it tries to protect you, to protect what you have in your tight grasp. It just wants you to win and to survive at all costs. Now, whilst I'm not someone who believes in awarding everybody, a participation medal just for taking part in something, being taught from a very young age that only winning is rewarded, whether it be in sports or taking exams in school, the need to win or the need to be right, that has a hugely detrimental impact on your trading. It's a terrible mental model to transfer over and apply to trading the financial markets. Remember, successful trading is far from normal. In fact, it's the complete opposite from most ventures in life. You need to have a very, very special relationship with both losing and winning, with both being right and wrong. Your goal is not to win and avoid losing. Your goal is not to be right. Your goal is simply to make money. That's it. Period. In conventional business, your profit is the difference between your revenue, which is generally generated by sales of a product or a service, and then your costs, such as purchasing the products, supplies, paying any overheads, office rent, insurance, paying the staff their wages. There are running costs, which you would identify as expenses that are part of running that successful business, right? You wouldn't think that your business is losing just because you must pay for your outgoings, such as business travel or office rent. You would see it as a necessary component of running the business, but also a key part of its ability to actually succeed and become profitable. In trading, losses should be viewed as expenses. Now, accepting this may be a bit of an alien concept. However, it is something that you will adapt to over time and realize as an important tweak in your perception of results in the market. Successful trading is a game of probability, not certainty. So it's important to realize that all trading strategies will have losses. The losses are essentially the price of doing business in the markets, and they're always going to be prominent regardless of how skilled you become. But risk is always predetermined and capped on every trade, so the loss of money should never come as a surprise to a trader who is risk managing correctly. Now, the problem, it really all boils down to the problem of the brain on uncertainty. Why? Because your brain is built to control outcome, it's built to be right, and it's built to try and predict the future. We all want to love and to do that. And these are survival adaptations that are part of our shared evolutionary psychology. But that's bad news for trading probabilities. Why? Because none of those three are controllable. But our brain is hotwired to think that they are. So let's take a quick look at what's actually going on biologically in your brain when you're trading. You see, every human has two distinct parts to their psychology. The first is your lower-minded animal that constantly wants to seek pleasure and avoid pain at all costs. This part of the brain is necessary for survival, and it's the most primitive part of the brain, and it activates the emotion center, which is your amygdala. The second is your higher-minded animal, and it's responsible for self-governance, strategic thought, and execution. So this part of the brain is necessary for thrival. It's the most advanced part of the brain, and it activates the prefrontal cortex. Now, when you are nice and calm and relaxed, all the incoming information, it goes straight into your thinking brain, right? Into the higher cortex. And that's why a lot of people, they find that they have great success with demo trading because there's no real capital at risk, right? There's no threat to life to the lower animal-minded brain. So they are calm and their thinking brain is in full control, and they continue to make the correct long-term decisions that's required for consistently profitable trading. But when you are stressed, the amygdala, your lower-minded animal brain, it sees the sensory information coming in and it makes a decision, based on that past learning about whether or not that information presents a dangerous situation or not. If it is dangerous, if it is uncertain, remember your animal brain is terrified of uncertainty. And when you're trading with real capital at risk, right, in an uncertain environment of the market, then you may as well have a saber-toothed tiger coming sprinting at you. Your amygdala instantly goes into fight or flight mode and your thinking brain is literally disabled. You are wired to perceive uncertainty as a threat. Your caveman brain, your amygdala, it's constantly just waiting to be triggered, and all of your primitive instinctive behaviors will kick in to make you avoid any perceived pain at all costs. And this all happens in nanoseconds. So this is when those common behavioral problems kick in, like fear of executing trades or fear of taking a loss, and your lower animal-minded brain, it starts looking for all sorts of reasons of why you should avoid taking a trade, or why you need to close the trade early and take your profits and run to protect what you already have. And then it's only afterwards, once you're out of the trade and your capital is no longer exposed to risk in the uncertain environment of the market, that the stress has then left your body and you are calm, your heart rate has subsided, and only now when your thinking brain is back in control, only then do you realize the mistake that you made. Now, if you've traded before, then I can pretty much guarantee that you will have experienced this, because I know I've certainly experienced this countless times, because your brain literally plays tricks on you. So what do you see when you look at this image? Do you see a young woman looking over her right shoulder? Or do you see an old lady wearing a headscarf? What about here? Do you see two ducks? Or maybe you see two rabbits? Or do you see a duck about to eat a rabbit's head? These optical illusions are a great illustration of how your brain can literally play tricks on you. And this will start to happen when you're trading and looking at the charts. When you've got exposure to risk in the markets, it's likely your brain will start finding any technical reason it can as to why you should avoid executing a trade, or why you should take your profits and run, just so you can avoid the risk and pain of uncertainty. Most traders misunderstand the problem. We think that we are logical and rational beings, and that view of the world dominates our perception. But we are not rational beings. We are emotional beings who then rationalize. And that's a start of understanding the problem that most people have with their trading. Biologically, our brains are built around fear and the avoidance of fear as a survival mechanism. It does not perceive risk. All it sees is threat to life. The emotional survival brain is just incapable of distinguishing between real biological fear, i.e. a threat to life, and the psychological discomfort of risk. Now let me say that again. The emotional survival brain is incapable of distinguishing between real biological fear and the psychological discomfort of risk, much less risk management. The essence of successful trading is risk management. That's all we are doing to make money. It's a process by which we assign levels of risk so that our odds of profitability are higher than our odds of loss over time. And on a longer term horizon than which our emotional brain was actually built to manage, consistent and profitable trading becomes possible with good risk management. However, to the short-term, immediate focus of the emotional brain, all risk is a threat to our imminent survival. To the untrained brain and mind, any triggering of threat, it automatically produces a biological fear response from our primitive brain. So the brain has to be trained to regulate impulse so that we can make the distinction between biological fear and the psychological discomfort of risk management. Everybody has a plan until they get hit in the mouth. Success in trading seems so doable. You just follow your plan until uncertainty becomes real and not theoretical. In the heat of performance and uncertainty, your trading plan disappears and instinctive patterns of avoidance and or aggression dominate. The thinking brain is easily overwhelmed. Patience is a virtue that is vital to success in trading. A large amount of patience is required in order to go through the learning curve. You need patience to wait for a trade where all of the variables from your system align, and then patience is needed when you're in the position in order to maximize profits and let the trade play out. But remember, patience is also a form of action. If you can't wait for good setups, then you will be ready for them with less cash to trade. Your choice. So, if we take these two parts that make up all human psychology, the higher and the lower minded animal, what we're going to do is draw a diagram that some of you may now be starting to get familiar with that represents the human mind with those two parts of our brains. So, up at the top, we have the higher mind. This is your soul, your spiritual realm, your thinking brain. And down at the bottom, we have the lower animal mind. These are your emotions, your senses, your physical realm. So basically everything that you can see, you can touch, you can hear, and you can smell. Now up at the top of the diagram, I want you to think of this as light. And down at the bottom, think of this as matter, right? So physical objects. Now in physics, we know that if you are a photon, that is a particle of light, you have no time, no space, no charge, and no mass. But down in the physical realm, things are a lot different. When you get two photons and you smash them together, they split and you create an electron and then you create a positron, right? From that particle of light, and then they gain mass. So down here in the physical realm, you have mass, you have charge, you have space, and you have time. Now, in science, we know that an ion is a charged particle. And in psychology, we know that anyone who has an emotional perception of something, we say they are emotionally charged about it, right? So down here in the physical realm, whenever you sway away from balance and neutrality, maybe you experience a feeling of, perhaps pure elation. You have a positive charge. Well, Newton's third law, it tells us that for every action in the universe, there is an equal and opposite reaction. So what this means is that the more elation that you feel, the more depression that you will inevitably feel afterwards, when you realize the perceived negative to your situation that you were initially blinded to, and now you are feeling negatively charged. You often see this with new couples in the honeymoon phase, right? Where they're absolutely infatuated with each other for the first few weeks or even months of dating, and they think their partner is just perfect. But as always, just give it a little bit of time, and suddenly they start to realize that, you know what, actually, their partner has quite a few annoying traits that are starting to grind on them and annoy them, and they realize that, actually, they're not that perfect after all. And they slowly start to become aware of the perceived negative traits that person has that they were completely blinded to before when they were infatuated with them, when they were living in a bit of a fantasy land. So elation and depression, they will always be balanced and conserved in your psyche, and that goes for every single polarizing emotion. Optimism and pessimism, pleasure and pain, greed and fear. So often people spend their entire lives oscillating between those poles. I'm depressed, I'm elated. I'm depressed, I'm elated. I'm depressed, I'm elated. They are yo-yos back and forth. I'm sure we've all come across someone who's so emotionally charged and volatile like that. I love them, I hate them. Down here is where the masses are. They live their entire lives oscillating from one polarity to the next. Back and forth, back and forth. They are constantly polarized and manipulated by governments and the media. Now, to master your life and to master your training is to pull out of these emotional oscillations. So the reason I've drawn the diagram like this, like a triangle, right, is because it's a pendulum. So think of a pendulum swinging to and fro down here in the lower mind, the animal mind. It oscillates back and forth. So down here, where your lower mind oscillates, according to the laws of polarity, rhythm, and vibration, as you move up and you start using your higher mind, your prefrontal cortex, the length of the pendulum becomes smaller and smaller, and the vibration becomes faster and faster. You are literally vibrating at a higher frequency. So high vibration is up at the top and lower vibration is down at the bottom. And that's what people mean if you ever hear them say that they want to vibrate on a higher level, or, I'm really feeling this vibe. Evolution is towards the light. That is where the masters play. The losing, 70, 80, 90% of traders, those are the masses down here. The masses constantly try to seek only pleasures and completely avoid pains. They try to stick only to the one side. Chasing a fantasy of a life that only consists of happiness, that only consists of winning trades with no losses. But in doing so, they just get stuck in a constant revolution, back and forth. The more that you try to swing to the right, to chase all of the positives without the negatives, is the degree to which you will snap back and swing to the left into the perceived negatives. And this is how people become bipolar, right? Swinging from each pole. The masses want to avoid facing and dealing with their fears and pains, by either getting drunk every weekend, chasing highs, escaping their life via sex, or, watching other people's lives online and living vicariously through them, following celebrities. But the more that they try to chase that high, chase the fantasy life of only happiness, only pleasures, acting with pure greed, the more that they inevitably swing back into the hangover, into the come down, the depression, the pain and the resentment. But the exact same laws apply to trading. The more you try to avoid realizing a trading loss, whether that be by not executing a trade that you should take, or moving your stop loss to break even too early, or even removing your stop loss entirely, then the more you are damaging your long-term profit and loss performance on your trading account. Master traders, however, they're not overrun by fear and greed, pleasure or pain. They evolve towards the light, toward the soul. They are objective and seek the truth. They seek actuality. I want each and every one of you to enter that 10% of traders, to see the light and become a master trader. That is my mission, to help you reach and maintain that level. And that's the journey that we're going to go on throughout this program. Hence the name, Photon Trading. That's what it means to be and embody being a photon trader. The part of your mind that seeks actuality is your higher objective mind. And as a trader, you must strive to achieve objectivity. In other words, you must seek to see the entire picture, including the entire array of less complete realities. So kind of what that means, right, in trading, if you're feeling certain or sort of overconfident, that's likely going to cost you money. Certainty in trading is the attachment to a single reality, an attachment to one side of the pendulum. Trying to know for certain if your demand zone is going to hold, for example. We don't know. Because for every reality that you hold, there is an opposing reality that is just as valid. And acting on what you realize through that limited awareness is just an indication that you're trying to fight the market from within rather than master it from above. Engaging your higher objective mind and seeing the whole picture for what it is It allows you to pull out of artificial certainty or fear, and that allows you to act methodically. So the major key here is to see things objectively as they are, operating in the now, without maybe seeing things as worse than they are out of fear, or maybe better than they are out of greed. If you look at the Bitcoin chart and you think of all the people who had bought Bitcoin at the top and they were still long, but then it started to trend to the downside from the all-time highs, those people are biased to only look for reasons that support their view that Bitcoin is going to keep going up, right? So they only read articles and Twitter posts and Instagram posts that support their view. So the million-dollar question is, how do we transcend these two poles so that we can view the market from a neutral perspective and keep our decision-making as objective as possible? How do we separate ourselves from the losing masses and become master traders? Because the brain that you brought to trading cannot give you the success that you seek. You are literally asking the brain to do something that is its worst nightmare. What nature has given you is not what the artificial world of the market needs. It will have to be retrained for the task to work in a probabilistic and uncertain environment. But the good news is that the brain is highly adaptive. The brain can literally change from survival success to probability success. Now, David Eagleman, who's an American neuroscientist, he calls this adaptiveness of our brain live wiring. So literally the brain is wiring as you go along. It can shift. The neuroplasticity can shift as you move forward, particularly if you know how to teach it. And this is kind of what the big problem is you can't really do it with affirmations or visualizations. Now, although they can help in the short term and they can be a useful tool, for trading, ultimately they will collapse under stress. But you can change the neuroplasticity of the brain. You can teach it to deal with and accept uncertainty. And you will learn how to perform well under pressure, because you will become the designer of the mind that engages that uncertainty in the markets rather than the historical self, rather than your ancient lower-minded animal brain. And this is the difference maker. You move from the deception of controlling outcome to controlling the mind that you bring to the management of uncertainty. This you can control, but not the outcome of individual trades. This is the edge that you seek. The key is, what emotions are going to show up as you start to engage the unknown in the markets? Because evolution is going to say fight or flight, aggression or fear. However, by design, you can learn to approach with curiosity, with discipline, with impartiality, and with patience. Because as you do that, you suddenly let go of the need to win. And then your job just becomes one of pure performance. Because you realize what I've got is the performance. I can control the performance. I can control the mind that performs. And that's what gives me the mental edge. The psychological edge that takes me out of evolutionary psychology. That needing to win at all odds. That gives me this enormous gift of where my job is to perform and just let the numbers fall. And this is assuming that your strategy and your rules have a proven profitable edge in them. Now what you're learning to do is bring the psychological edge that was always there, but you're building it into the mind that engages uncertainty. And then what you'll realize is that trading has always been about the mind, about the emotions, about the psychological self that engages that uncertainty. Because there are lots of trading systems that can give you an edge, but it is your mental edge that drives it all. So learn to design that to drive your strategy edge. The surfer cannot control the wave, right? He works in cooperation with it, and he just takes whatever the wave is willing to give to him. Now, as a trader, you must learn to go with the flow of the market and not be attached to your biases. And you're going to learn how to develop interlinking skills that result in a mind that is comfortable with engaging in uncertainty and staying calm and patient, so that it operates from disciplined impartiality, because that is the only state of mind that works in trading. It is in freeing ourselves from the power of fear that we change our nature and how we trade. And until you develop the skills and tools to approach your fears, they're going to control you and your trading. So naming your fears and recognizing that they can teach you a lot about yourself is fundamental to your growth. Acknowledging your fears and creating the courage to push through them is essential to your growth as a trader. And your biology is going to fight you every step of the way. So you will be learning how to manage and calm your biology. Now, it usually takes around 5 years for a trader to even begin to realize, right, that this is a necessary part of the evolution of a trader. So the sooner that you realize it, the better. The trader's state of mind, it's a skill that can be taught and learned, and it's not going to happen by osmosis. It's going to happen by training and working on it. It is paramount to think the correct way, otherwise you will be emotionally robbed of your greatest opportunity.